what we have here and what we have here. Derek, what's happening, Derek? Derek's in the house. What's happening, Derek? TJR. Tilwan, what's happening? B to the max. Jim Bibby, what's going on there, Jimbo? Jimbo, why aren't you on Zoom call? Secretariat, what's going on? Uh-oh, who's that? Who's that? Who's that? TJR, good evening. Gang Hood, yo, it's me, Gabriel. Mike Sweeney, back again. Gabriel Miranda, how are you today? Rich Bruner, good evening, good evening. Gary Host, what's going on? Drew, Christopher, Angelo, I can't read that name, terribly sorry, I don't read Arabic or whatever that is. Aisha, Pepe, what's going on? Eric wants to take a look at ABBV. ABBV, Eric, you say, huh? Well, let's just jump right on in and take a look at ABBV. Now, for those of you who don't know, number one, my name is James. This is Dividend Stock Talk, ABBV. Okay, this is Dividend Stock Talk brought to you by the 10-Minute Trader, okay, where I invest in dividend stocks for a simple, safe, predictable, consistent 1% per week. Now, it only takes me 5 to 10 minutes a day to do my trading, only because it's a simple, easy strategy. Two can you look at? Okay. Gabriel, good evening. Gang Hood, can you look at TTW? Oh, I have no idea what that is. No idea whatsoever. BP, thank you for that. All right, so ABBV is the first one we're looking at this evening. First and foremost, I always do every time I look at a stock, I always do A, B, C, 1, 2, 3. It's always the same. Who's this? BP wants to take a look at Wally World. We'll take a look at Wally World. Sit tight. All right, so one step at a time. It's kind of like paint by numbers. You remember those? 1 red, 2 blue, 3 green, 4 yellow, 5 white, blah, 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 paint by numbers. At the end, there's a big old picture that appears out of nowhere. Imagine that. Who do we have here? USA. Good evening from New Mexico. Cool beans. All right, so ABBV is the first one we're looking at today. Let's take a good gander at it. I'm looking for 5 things. Every time I see a chart, I'm looking for 5 things, and they're relatively easy to see. Let's see if you can find them with me. You ready? Number 1, the high of the year. Number 2, the low of the year. Number 3, where was it a year ago? Number 4, where is it right now? And lastly, number 5, what is the motion? Down, up, down, up, down. What's going on right there? It looks like it's changing direction. Well, let's zoom in a little closer. This is the last 30 days. 30-day high, 30-day low. Where was it? Where is it? Look at this. Down, up, down, up, down. Now she's going up. 1 day, 2 days. I love 2 days to the upside from a 30-day bottom coming off of a 30-day top. 30-day top, 30-day bottom, 2 days to the upside. That looks perfect. But here's the thing. Do the numbers work? What am I buying for? 216.77, looking at the 217s. 217s, 130. No. Next week's 217s, 305. Oh, hell yeah, that'll work. That one will work. Okay, so fine. Chart looks okay. 1 year chart looks okay. That looks okay. Over here, the numbers look fine too. Great. Now we're going to do what's called a covered call. I lost my thought there for a second. Covered call. Can we look at Compass? Okay, APA, JAPA. You got to give me the ticker symbol. I have no idea what Compass is. Okay, Eric, we're looking at ABBV right now. Thundercat, how you doing? Mike and Love, how you doing? Eric, APA, JAPA, good evening. G-Man, what's going on? Ali, howdy, howdy. Memo Sosa, good evening. Okay, APA, JAPA, you got to give me the ticker symbol for Compass. I have no idea who the heck they are or what they do. So, that being said, chart looks okay, numbers look okay. Now let's take a deeper dive into the chart to see exactly what it's telling us. Right here, the last week, down, now she's going back up again. Great. Well, a covered call, if you did not know, is one of the safest, simplest trading strategies there is. The stock doesn't have to move at all. Let me explain. Okay, so if I'm buying it tomorrow morning, 216.77, I'm going to sell at the closest strike price, which is going to be this one, the 217. So I'm selling somebody the right to buy it from me 2 or 3 seconds after I buy it. Because I'm buying it tomorrow morning. If I buy it tomorrow morning, I sell somebody the rights to buy it from me for basically the same price I just paid for it. Now, I am going to collect the difference between 216.77 and the 217.50. Okay, what is that? It's about 80 cents. Plus, I'm going to collect this right here, 305. So I'm picking up probably around $3.90 per share as a profit on a $200 stock, $216 stock. Okay, so let's do one, because we haven't done one yet today, because we're just getting here, just getting started. Simple, safe, predictable, consistent is what I'm trying to do, 1% per week. Who do we have over here on YouTube? Baratali, good evening. Leandro, he's talking about, oh, no, not at all. Go away. Could you lift your glasses up? Eileen, how are you? Cohen, how are you doing? Dang, I just picked a beer can off the side of the road at that rate. Okay, I have no idea what that means, but hey, it is what it is. ABBV looked a little high range for the year. When did that matter? Hold that thought. Let's pull it back, see what he's talking about. Okay, so who's that? Robin the Fever. Okay, Robin, let's check this out. Here's the high of the year. Here's the low of the year. She shoots up, pulls back. Now, from the low in April, 160, she shoots up to 250. That's a $90 increase. So from the $90 increase right here, she pulls back from 250 all the way down to 210. That's a $40 drop. Well, that's almost right in line with the $90 increase. $90 increase, $40 profit taking. So this right here could be the start of a new trading range. When you get into a new trading range, all bets are off. Trading range right here, there's one. Okay, here's another one. Here's another one. Here's another one. Well, now we might be right there. Okay, stocks get into trading ranges and they have a tendency to stay there until they're done. Now, it's strange to say that because stocks go up until they're done going up. And then they go down until they're done going down. And then they just go in the opposite direction. So you may not like it where it is at the moment. But for me, I'm pretty much okay. She shoots up. Here's the high. Pulls back. Here we are right now. New trading range. Now, Robert, if I was going to buy it and hold on to it for the rest of my life, I might be concerned. But I only want to hold it for 4 or 5 days. That's it. Then I want to jump off and go on to another stock. Unless, of course, the market maker wants to make out some kind of a deal. Big Boss. What's up, Gramps? How you been? Thank you, KH. Big Boss, good evening. Greetings from Brazil. What do you think about crypto? Well, can't get away from it, so going to have to join it. God, could you sound any more like Carmela? Oh my God, that sounds like a horrible insult. Boo to you. Is it possible to live on $115,000 in an IRA at 57 with this kind of trading? Well, it's really going to depend on where you live. Okay, so here in the US, could you live on $115,000? Well, at 1% per week, that's about $1,100 a week. That's $4,000 a month. I don't know, could you? Some people can, some people can't. Okay, so let's keep on going. So we're going to do the 217, see what it looks like. If you don't understand it, please ask questions. That's what we're here for. Okay, this week the number didn't look too good, but next week looks pretty darn tasty. So let's do next week's. We're going to do just one contract so you get an idea of what it looks like, what it sounds like, and what it could possibly mean to you in your future. Because some people like the idea, some people don't. All right, let's do this. ABBV, buy one, covered call of ABBV, 100, which is the weeklies. 14 November 25. That's not this week, that's next week. So this trade right here is going to expire next Friday. So I buy the stocks tomorrow morning. Next Friday, this option expires, and whoever buys that option from me, they have between tomorrow morning and next Friday at 3:59 p.m. The 217 call option. Now, can the stock hit 217.50 by next Friday? Well, yeah, it can. So what happens if she goes over 217.50? Well, I get all my money back, plus I get that nice little profit. The profit here, $390 per contract. Now, to find out the rate of return, we take the profit, max profit, $390, divided by the cost of the trade, including commissions and fees. That's 21 G's. All right, well, let's take a look. Calculator. $390 is the profit. We're going to divide that by the investment, 21,360. That comes to a grand total of 1.8%. 1.8. Now, what I'm looking for is 1% every week. Now, the reason why I want 1% every week, well, 1% a week comes to 50% ROI, or return on investment, by the end of the year. Now, if you have 100,000, 50%, well, you got 115. 50% of that is what, 55, 56, $57,000 a year. Can you live off of $57,000 a year? That's the question. If you get 1% a week. Well, this trade right here is offering 1.8 for this week. So that makes sense to me. So you know what? I like this one, so let's save it. Let's save it. There, that's good, and there, and we go like that. And give it a second, there it is right there, and there it is right there. Okay, give it a second, here she's gonna pop up. All right, there it is, right there. All right, let's move this over. All right, we got a new day. So new day, we have a new stock list. There we go. Beauteous. ABBV, ABBV, 14 November, 217.50. 390 is the profit. 2100 is the investment. So it comes to 1.8%. Whoops. 1.8%. No, that's today. This is what we found yesterday. Check that out, what we find yesterday. All right, yesterday we found Devon Energy, AEM, CF, Wally World, and Comcast. All right, that being said, let's make that a little smaller. Right there, okay. Let's go to the next one. Next. Okay, so Robin, depending on what you're looking for, if you're looking to go long-term with ABBV, it might be a little bit high for you. I don't want to hold it forever. I want to jump in, grab my 1%, and jump on out. If I have to hold it for 2 or 3 weeks, fine. The way the chart looks at the moment, it doesn't look if it's going to, go anywhere else anytime soon. Okay. Mikey B wants to take a look at Kinder Morgan. Could the moon be celestial mirror showing the earth? Interesting. Don't even want to get into that conversation. All right. BP wants to take a look at Wally World. All right, let's get out of this. Get out of there. Get out of there. Go back to here. Go back to here and look at Wally World. Didn't we look at Wally World the other day? We did. We looked at Wally World the other day. Sit tight. This is what we're looking at. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Up, down, up, down, up. What's going on right there? It looks like it's changing direction today. Last 30 days. Now, the reason why I want to look at the last 30 days, because it gives me a good idea. Where do I think it's going next? So 30 days ago, we're at 103. We dropped down to 100, shoot up to 109, drop down to 100 again. Monday was higher. Tuesday was higher. Today pulled back, kind of a little depressing, did pull back today, because that would have been a perfect opportunity right there. Look at the run up right there. Here's your profit taking, and then she turns around. But no, today, what the hell happened today? So Walmart, I wouldn't jump in quite yet. I would wait for it to go open a little bit higher than right there. But maybe tomorrow for Walmart. Joey, target worth it with the EX dividend date next week. Oh, Joey, Target is one of those companies you really got to be leery of what is called a black swan. Okay, let me briefly show you what a black swan is, Joey. Right there. See that? The high of the year, 158. Low of the year, 85. Okay. Okay. Dividend earnings, dividend earnings, dividend earnings, dividend earnings. Look at this right here. Gap right there, gap right there. No gap here, which is surprising. But look at this. That is a black swan. So let me zoom into that and give you a little, because I haven't done this in a while, so let's do this. Okay, now, I want to show you something rather interesting. I show it once a month or so, just to give you an idea of what's going on behind the scenes. Okay, so a black swan, you get the earnings, dividends, and the conference call all right there. Big, huge drop from 158 all the way down to 120. That's a big drop. When it drops that much or jumps that much, they call that a black swan because it's something you don't see all the time. It does happen, but not very often. Okay, so what is I want to show you? See these blue lines down here? These little blue lines? That represents the volume, how many shares traded that day. So if we take our cursor, put it right down here, put it right at the top of all those, the average, right there. You get an average of 7.5 million shares traded on average every single day. Now, a black swan that happens right around earnings, see that? The earnings right there. Okay, now with a company like Target, you're going to have a 1, 2, 3 penny spread between the bid and the ask. Now, the bid is what you can sell it for. The ask is what you can buy it for. Bid, ask. Okay, so the difference between the two is called the spread. Okay, so look, think of the market maker as your local corner store owner. Let me explain. Now, the local corner store, Quick Mart, Quickie Mart, Circle K, 7-Eleven, Quick Stop, whatever it is. We all have a corner store right around the corner. Might be a little further drive, it might be a walk, whatever, but we have a corner store on the corner. Okay, so think of the market maker as the owner of the store. You go in to buy a gallon of milk. Guess what? You cannot buy the gallon of milk from the farmer. Only the store owner can. So it's kind of like the same thing with the stock market. You cannot buy stock from anyone else. You can't buy stock from me. You can't buy stock from Susie. You can't buy stock from Tom. You have to buy it from the market maker. Now, when I want to sell my stock and make a profit, I can't sell it to you. I can't sell it to you, and I can't sell it to you. I can only sell it back to the market maker. So the market maker has two prices. One is the bid, what you can sell him your stock for, and one is the ask price, what you can buy it for. And the difference between the two is called the spread. So what am I getting at? Okay, so normally for Target, the spread is around 2 cents per share. Okay, so why am I telling you? Hold on. It's going to make sense in a second. Get out my calculator. Now, remember I said the average volume, that's these numbers down here, the average volume is 7.5 million shares per day. Imagine that, 7.5 million shares per day. So let's find out what does the market maker make on an average day. So you get 0.02 cents per share. Because remember, market maker gets paid for every share he buys and sells. Okay, so 0.02 cents multiplied by 7.5 million shares per day comes to a grand total of $150,000 a day. Think about it. How would you like to be a market maker? $150,000 a day. Just to burst your bubble, it's not that easy to become a market maker. Number one, you have to pay a huge fee in order for the application. That's number one. And then you need a certain amount of years of experience on the trading floor. So, back to my example. $150,000 a day. So what happened on the Black Swan day? That's this day right here. See this? The Black Swan. I'm going to explain a little bit more about that, and you're going to be like, no shit. Hold on. You're going to love this. Okay, so the Black Swan was right there. So let's see how many shares traded that day. 61 million. Now remember, 2 cents a share, 61 million shares. Okay. $61 million shares. Now, market maker makes 2 cents per share. He made $1.2 million on that day. So, what actually happened here? Normally, what happened, you got your conference call, dividend, and the earnings call all on the same time. So, the earnings, usually, 5 little words. We didn't hit our target. That's it, 5 little words. We didn't hit our target. What does the market maker do? He takes the stock price from here and he drops it down to here. Nope, to here. And then it just kept on dropping. Now, what does that mean? Well, there's 5 numbers every time you trade. There's 5 numbers to take into consideration. 1, the opening price of the day, the high of the day, low of the day, the volume, and then the range. Okay? Open, high, low, range, close. Sorry. 6 numbers. Open, high, low, close, volume, and range. Okay? So the opening price, closing price, the high, the low, and the range. And the volume, 61 million. So, if the market maker gets a little email saying we didn't hit our target, he takes that into consideration. Let's say she. Fair, let's be fair. He or she takes that information. We didn't hit our target means they missed their earnings. That's all that means. That doesn't mean that the CEO called up all the employees and say, hey, we didn't hit our target. Stock price just dropped. Take a couple of days off until we recover. No, that does not happen. Okay, stock price has very little to do with the company itself. It's the information that the company gives to the stock market, the market maker, and everybody there on Wall Street and say, hey, this is what happened. What are you going to do about it? So the market maker says, okay, well, we were here. You didn't hit your target. Great. Now we're going to start right here. So what happened? Who actually made money on that day? Well, the person who sold down here, they didn't make the money. And this 61 million people that bought on that day, were they buyers or were they sellers? Were they sellers panicking, looking to save whatever money they can because they thought it was going to go to zero? Or because it dropped like this, was that institutional buyer say, hey, this thing just dropped a huge amount. I'm going to buy a whole bunch. Who was it? 61 million shares bought and sold. Who was it? Was it the buyers? Was it the sellers? It doesn't really matter. Market maker walked away with 1.2 million that day. All because those 5 little words. We didn't hit our target. So, back to target. You want to take a look at target? Well, that's something you need to take into consideration, because guess what? There it is right there. We are ready for a new dividend. Look, there's no dividend, no earnings, nothing. So it's coming up pretty damn quick. So let's go to here. Let's put in target. There it is right there, target. So we're here today. Okay, tomorrow, next day. Wait a minute. No, we're here. Sorry, we're here, the 5th. So we got 1, 2, 3, 4, 5 days until the dividend. Wait a second. Where's the earnings? Earnings for target. There's earnings right there. Okay, dividend, earnings. So you might be able to get the dividend before the earnings. That's what I would do. I sure as shit wouldn't want to wait for the earnings, because if it's a positive earnings, well, stock might go up. If it's a negative earnings, well, get that opportunity for a black swan. If you like it, of course. So let's go back. Let's go back to target. Okay. The high, the low, where was it? Where is it? Down, up, down, up, down, up, down. What's going on here? Let's check it out. Last 30 days for target. There you go. 30-day high, 30-day low. Where was it? Where is it? Sideways, down, up, down. What's going on here? Looks like it's changing direction today. But I like 2 days the upside, and then on the 3rd day, which would be Friday. Okay, tomorrow's Thursday, and then Friday. If 2 up days in a row, that means I would be jumping in on Friday. Not tomorrow, not today, maybe Friday. But that's me. All right, what do we have next? All right. ABBV looked a little high, got that one. All right. Southern Belle, good evening, and how are you today? Jesse, what's going on? Joseph, I do, you do, poor man's covered call. Okay, Joseph, that doesn't make sense, but I understand what you're trying to say. Do I do poor man's covered call? Yes, I do, but I'm not going to share it here. The reason, Joseph, I'm not going to share it here is because I'm a nice guy, but I got to draw the line somewhere. I'm sharing with you a trading strategy, safe, predictable, consistent. 1% per week is the strategy. That's over 50% per year. Okay, that's the freebie. Okay, I got to draw the line somewhere. I can't give everything I know away for free. New Jersey 78 wants to take a look at UNH. I don't know why. UNH. Let's try it. Third time. UNH. There we go. I'm going to say no to UNH until it turns around. Look, 30 days ago, shoots up, comes down, goes sideways, jumps up. Here's your new 30-day bottom right there. Now, don't get me wrong, this thing's going to keep dropping until it sounds so silly. Think about it. It's going to go down until it's done going down. Where is that? Who knows? Who knows where the bottom's going to be? We don't know. Apparently, it's not today. Maybe tomorrow. Maybe the next day. What is your best 2 indicators? My 2 indicators are consistency of profitability and weekly options. That's mine. What do you think of Webull? Oh, Webull's not 20 years old, and I'm pretty sure they don't have dividends yet. Okay, BP, we looked at Wally World, we looked at Target. Gang Hood wants to take a look at T2, TTWO. Never heard of it. Take Two Interactive. I'm not 100% sure I like that, only because, okay, you got your high here, your bottom here, okay, it was here, now it's there. Look at this. It shoots up, pulls back, up, back. Okay, so what's going on at that high? And I don't like jumping in at the high. Here's your last 30 days. Well, it almost looked good 30 days ago. Down, up, down, up, down. Here's your 30-day top, 30-day bottom. Look, there it is right there. 1, 2, 3, right there. Right? I would have jumped in right there, and then I would have been sucking wind because she dropped. Now she's going back up again. Well, I have no idea what take two does. It's not on my list, so I have no idea what they even do. Okay, what else do we got? Fufu, how are you today? Lemonade. Good day for lemonade. LMND. LMND. Okay, that is a good day for lemonade. Well, ain't going to do us any good. Live restricted for some audience. KMI just raised dividends. Cool beans. What about K-View? Ooh, somebody wants to take a look at K-View. We'll take a look at that in a minute. I got one for you. Oh, Realty. Oh, Ride 6 Ride. Okay, hold on a second. All right, so Lemonade, I'm not quite sure. Here's the bottom. Shoots up. Big jump. What the hell are we supposed to do with that? I mean, are you showing it to us just to show off that, hey, you bought this and it shot up and you made all that money? Well, what are we supposed to do with it? Because here's your 30-day bottom, shoots up, and then she gaps up and then keeps on going. Well, it's not going to do the exact same thing tomorrow or next week because very rarely does a company do that twice. So what the hell are we going to do with it? Next. Okay, so R6 Ride, O Realty. Let me explain to you why I don't like O Realty. Besides the fact that it's a monthly options, okay? Now, when I say I'm looking for weekly cash flow, the key words there is weekly and cash flow, okay? Weekly cash flow. You can't get weekly cash flow with monthly options. November, December, January, March, June. Those are monthly options. What I'm looking for are weekly options. 7 November, 14 November, 21 November, 28 November, 5 December, 12 December, 19 December, so on and so forth. I don't do monthlies because the monthlies just don't work for me. I want 1% a week. I can't do that with a monthly option. And to make matters worse, okay, this is 30 days. Down, up, down, up, down, up, down, up. Great. Now tell me where it's going to be in 30 days from today. Not so easy, isn't it? I don't do monthly options. They're difficult to try to figure out where they're going to be in 4 to 5 weeks. That's difficult enough. And then secondly, I can only get one option play per month. And if not getting 4 or 5%, what's the point? Because I want 1% every single week. So I just don't do monthlies. Sorry about that, R6 Ride. R60 Ride, all right. Jerry C., how are you today? Bito wants to take a look at Apache. Where is it? Apache. There it is right there. Apache, APA. We're going to say no this week. Only because Apache, look, down, up, down, up, down. See, it's in a downward trend at the moment, 26.66. As soon as it finds a bottom, as a matter of fact, I'm going to write Apache down for next week, only because this thing's got to find the bottom sooner or later. Tomorrow, Friday, Monday, Tuesday. I mean, it's got to show up sooner or later. If I look at it every single day, eventually, I'm going to find the bottom. Hey, here it is once. Here it is again. Here is it again. Now we're looking for it one more time. Where is it? Where is it? Come out wherever you are. We're just going to wait one day at a time. Okay, so APA, we're writing that down for next week. It's It's already written down for next week. Imagine that. Polly, I-O-V-A. Polly, what the hell is I-O-V-A? I-O-V-A. Iovance Biotherapeutic. Okay, Polly, I'm going to say no. And the reason I'm going to say no, Polly, is this thing's at $1 a couple of months ago. So if this is at $1 a couple of months ago, how can it have 2 decades of profits? Now, I'm going to apologize, Polly, because I didn't give you what the rules were. Okay, you're new here. So let me explain to you, for all of you that are new. Okay, number 1, I'm looking for a simple, safe, predictable, consistent 1% per week. Now, the trading strategy I'm showing you, I created specifically for my 9-year-old daughter back in 2008. She came up to me one day and said, "Daddy, what are you doing? Can you teach me?" Imagine that. 9-year-old wants to learn how to trade stocks. Joseph, not live. Joseph, why would you say not live? I have no idea why you'd say that. But anyway, my 9-year-old wants to learn how to trade stocks. Okay, well, most adults don't get it. Most adults don't understand it. As a matter of fact, nobody in my family, nobody, aunts, uncles, cousins, nobody in my family. And I have a big family. I got 12 brothers and sisters. Okay, a whole bunch of aunts and uncles, whole bunch. Okay, you know how those the Irish Catholic are. Not to insult anybody, but back in the 30s, 40s, 50s, and then the 50s and 60s. Oh yeah, whole bunch of big families. Anyway, besides the point. Nobody in my family invests in stocks. Nobody on the street that I grew up on invested in stocks, as far as I knew. But then again, that's besides the point. So I forget what I was going at. What the hell was I talking about? Oh, so as I'm saying, my 9-year-old wanted to learn how to do stocks. So I had to create a trading strategy specifically for a 9-year-old. So it had to be simple, safe, predictable, consistent, and no way. Number 5, no way for her to lose. That was the challenge that I had to overcome to create a trading strategy for a 9-year-old. So the 5 rules. Rule number 1, these rules are so simple and it boggles my mind why most people don't understand them. Rule number 1, never buy anything you do not understand or you do not want to hold on to for the long term. Long term, that means the day you die. Pass it on to your children. If you do not want to buy it long term, don't buy it. Rule number 2, never sell at a loss. It just defeats the purpose of the game. And yes, it is a game. Don't kid yourself. We jump in, we jump out, we make a profit. We try to pick the right one, pick the right pony. Rule number 3, make sure the company is consistently profitable. Now, you may or may not know, but the stock market that we know of today has been around for over 400 years. 400 years. So for me, I want 2 decades of profits. I want to make sure the company's profitable for at least 20 years, 2 decades. Now, you may think that's a lot, but here's the thing. There's over 10,370 or 10,570. It's a lot of stocks. Each week we check. Each week they add more companies to the stock market. Once in a while they take some out. So this week, 10,000, I think it's 370. It's a lot. So how do you decide? Well, for me, it's pretty simple. Consistency of profitability and weekly options. Okay, so rule number 4, weekly options only. Now, the name of the show is Dividend Stock Talk or Dividend Investing for Weekly Cash Flow. Now, you can't get weekly cash flow unless you have weekly options or you decide to sit in front of your computer and look at this all day long. Which, don't get me wrong, I tried it once and some people are really good at it and I wasn't so good at it, so I just do what I'm good at and then I just don't do anything else. Because what I do works for me. Now I'm just showing you what I do. If it makes sense to you, great. Wonderful. Rule number 5, make sure all the numbers work. Now when I say all the numbers, I mean what am I buying it for? What am I selling it for? What am I collecting? And what is this chart telling me? I'm looking for 1% a week. 1% a week is over 50% per year, and that works for me. Okay, 10 or 15 minutes, I'm done, I'm good, I'm a happy camper, and I can get on with my day. All right, Jay wants to take a look at Delta Airlines, DAL. Interesting. Let's take a look at this, Jay. Here's your high, here's your low, here's where it was, here's where it is. Look at this, up, down, up, down, up. What's going on right there? Last 30 days. I like the last 30 days. Last 30 days gives me a good idea of where it should be or looks like it's going next. 30 days ago was the bottom. It shoots up, there's your top. It drops down. Yesterday is the bottom. Today, one day up. Just one day. Okay, so I'm going to put Delta Airlines on the list for next week because it doesn't look like it's going to hit 3 days tomorrow. And Friday, I don't really buy anything on Fridays. I buy on Mondays and Tuesdays. Fridays is just, I take a look. What's going on? DAL for next week. Alrighty, so what do we have next? Kano Flemez. What's going on, Kamo? Mansarat Singh, how are you doing today? Fufu, can we take a look at Hershey? Hershey, all right, HSY, there we go. Interesting. What do we have over here? Nobody's even there. Oh, that's why nobody's there. Oh, I forgot to do that, didn't I? All right, give me 1 second while I send out invites. I forgot to send out invites. Oh, I'm not going to do that now. Oh, well, it just happens that way. Janja likes brain training. J-Dage likes brain training. Wants to take a look at K-View. Okay, we'll look at K-View after we look at Hershey. Same thing. Here's the high, the low. Where was it? Where is it? Look at this. Up, down, up, down, up, down, up, down, up. What's going on there? There's the bottom. Shoots up, pulls back. Nice. 169.88. 169.88. We look at the 170s. The 170s go for $3. Yeah, I like $3 on a 170. Ali wants to take a look at Campbell Soup. Sit tight. We'll get to it. Okay, last 30 days. Wait a minute. 170. Yep, that works. Last 30 days. Here we go. Shoots up. Here's the 30-day high. Drops down. Here's a 30-day bottom on Monday. Tuesday higher. Wednesday higher. Perfect. So we're looking for one more day. And that could be tomorrow. If it is tomorrow, what does Hershey look like? Well, the 170s are going for $3. Okay, well, let's take a gander at it. Right there, covered call, there it is. And the 170s, there it is. Just one contract, there we go. At the market, there it is. And here's Johnny. Johnny, tell him what he's won. Buy one covered call. 14 November, that is next Friday. The 170 call option against the Hershey stock at the market to open. My profit, $3.97, max profit. Cost of trade included commissions, 16 spots. Well, let's see what that looks like. All righty, so $3.97 is the profit, $3.97, and the investment's going to be $16,603. Comes to a grand total of 2.39%. 2.39. Well, if you like Hershey. So here's the thing. So if I buy Hershey tomorrow morning, I sell somebody the rights to buy it from me for the same price I just paid for it. That was it, 270? 170. Okay, I'm buying 169.88. Now, I know someone's going to say it, but the numbers are going to change first thing in the morning, all these numbers. Okay, yes, the market opens, all the numbers change, but the math doesn't change at all. What's the purchase price? What's the strike price? What's the premium? You divide the premium by the profit, and then how much do you make, how many you walk away with. See, I like covered call because it's simple, number one. It's safe, number two. It's predictable, number three, which means I know what my profit's going to be before I even jump in. I don't have to wait for the stock to go up. Most people buy a stock and wait for it to go up, and then they have to make that decision. Well, is this enough profit? Should I get out? Blah, blah, blah. No, I don't want to deal with that kind of stuff. I want to buy it. I want to sell it. I want to get my profit. And I want to walk away. Now, my goal is 1% a week. This trade is offering me 2.39% for just 1 week. So yeah, I'll do that one. So let's get this thing out of the way. Let's put it down here. There it is right there. Okay, we're going to save this one, 2.39, hold tight. There it is right there. Okay, all righty, and there it is. Okay, give it a second, 2.39%. There it is right there. And here we go. Hershey's, 14 November, the 170 call strike. 397 is the profit, 16 spots is the big investment, and the profit is 2.39%. Okay. 2.39%. Put that right there. Gotta love it. Alrighty. I'm liking that board. That thing's cool. All right, so I like Hershey. It looks good, but you have to ask yourself the question. Now, this is important. Okay, this is not advice. This is not. I don't give advice. I don't give tips. What I do is I look at the stocks you guys asked me to take a look at. So someone asked me to take a look at Hershey. I put it through the ringer, so to speak. What can I buy it for? What can I sell it for? Using the trading strategy in which I like. Now, I like simple, safe, predictable, consistent. That's what I like. Okay? I don't want to be on the front of the computer all day long. I have other things to occupy my time. I've only been retired for almost 2 years. Okay? So I'm pretty much okay with what I'm doing. 1% a week works perfectly fine for me. Now, there are other trading strategies out there that make a lot more money. If you're looking for capital growth, which means you buy a stock and you just watch and wait, feed it, just see it grow, you're in the wrong place. Terribly sorry. I love you guys being here. It's wonderful sharing. It's wonderful answering questions. It's wonderful helping out people. However, if you're looking to buy something and have it grow exponentially to whenever you retire, you're in the wrong place. See, I'm retired. What I'm showing is specifically for cash flow, weekly cash flow. Okay, I'm looking to get a return on my money every single week. So every single position that I have gives me something on a weekly basis. And no, I don't have anything that I carry for a long period of time. Let's keep on keeping on. What am I going over here? What did I miss over here? Alrighty. Wow, I missed all these questions. All right, we looked at UNH. Hey, Twist Pasta, what's happening? Sir, if the stock drops, there is no guarantee you get your 1%. Okay, Twist Pasta, what you're missing. Okay, I hear what you're saying. I do. Hold that thought for 1 second. Okay, so Pasta. This trade right here, we're looking at Hershey. If I buy this tomorrow morning, this is the price I'm paying. Okay, that's the price I'm paying right there. If I sell somebody the rights to buy it from me at 170 tomorrow morning, this $3 right there, I get that tomorrow. That's more than 2%. I get that tomorrow. If the stock drops, I already got my profit. So I really don't care. But I don't want it to go down too far Because if I'm selling somebody the rights to buy it at 170 and this thing drops below 170 between now and next Friday, remember the option I'm looking at is the 14th of November. Okay, not this week, 7 November. That's this week. There's not enough money there. Next week, the 14th of November. So we have between tomorrow morning, this is where we are right now, tomorrow morning and Friday, next Friday. That's 9 days away. See, 9 days away for it to be at 170 or above. Okay, so if it jumps up to 180, 190, doesn't really matter because I'm selling somebody the rights to buy it from me at 170. So I really don't care if it jumps up to 190. However, if she drops down to 165, well, I already got my $3 right here. I already got that. So next week, actually not next week, the week after, that would be 2 weeks away, I'll have to reevaluate and see what do I reset it at. Do I dollar cost average? Do I roll it forward? Do I just buy it back? There's a lot of different things we can do once we get into position. But the number one question you should be asking yourself, number one is, do I like the stock? Do I want to own it at this price? And am I willing to hold on to it until it hits my target? So if I'm buying it at 169.88, my target price is 170. So if it hits 170 tomorrow, the next day, the next day, the next day, I really don't care if it may 2 or 3 years from now hit 170. As long as it's a good company, as long as they continuously increase their profits year after year after year, I really don't mind. And if they have good premiums, look at the premiums. Let's even take a look at more of these. Okay, look at all these premiums. Here's the strike price right there, 170, more than 1%. 2 strikes, more than 1%. 3 strikes, just a little bit less. 4 strikes in there. 5 strikes, you're only getting 10 cents at 5 strikes. But still, something coming in is better than nothing. Now, you got to remember the change of thinking. You got to change your thinking because most people, before you came here, bought stocks and held on to them for years to collect the dividend or to collect the capital appreciation. It wasn't until you came here that you're changing your thought process. Hey, I can start investing for weekly cash flow. Well, that's a whole new ball game because most people buy a stock and they hold on to it just to collect the dividend every 90 days. Well, here, not only am I potentially looking forward to collecting the dividend every 90 days, I'm also collecting whatever premium they are offering me on a weekly basis until it hits my target. My target in this situation is 170. Right now, it's at 169.88. It's a good company, Hershey. We all know who Hershey is. Okay, Hershey, okay, fine. I got no problem with it. So the number one question you should be asking yourself is, number one, does it make sense? That's the number one question. Number two question should be, do I like Hershey? And then number three question, do I like Hershey at 169.88? They're all valid questions, and you are the only one who can answer it for you. Because we are all on a different journey. We all have different goals. We all have different dreams. We all have different desires. Mine is simple. I want a simple, safe, predictable, consistent 1% per week on my portfolio. If my portfolio is $100,000, I want $1,000 a week. If my portfolio is $50,000, I want $500 a week. However I get it, I really don't care. Stock increase, options, dividends, I don't care. As long as it's a good quality company, they have weekly options, and they're profitable. That works for me. Let's go. Stock drops, collect premiums. Thank you there, Joseph. I'm going to agree with you. Gainesville. For example, Texas Instruments. Let's take a look at Texas Instruments. I actually have some. TXN. Uh-oh. Please retry. TXN. All righty. Let's take a look. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Down, up, down. Now she's going up 163.57. So the question on top of your mind should be, do I like Texas Instruments? Thanks for all you do showing what's going on. Lynn, you are welcome. Have a good day, Miss Lynn. Jalen, what's going on? Is it echoing for anyone else? Sorry about that, Jalen. Gabriel, you say 3 days to the upside, then you'll jump in. When do you jump out? Gabriel, that's an awesome question. Give me a couple seconds. I'll get to that one. Jalen, I don't do futures anymore. I used to do futures years ago, but I don't do it anymore. Okay, it's just too much effort. You know, I have a nice, simple, easy life, and I like it that way. You know, you get to a certain point in your life, and it's like, oh, well, everything is fine. Everything is wonderful. Why do I want to complicate it? I'm no longer, rushing for that money thing. So, I'm assuming you're doing the copper futures. I have no idea why, but okay, is what it is. Gabriel, we're going to get that in a second. We're first going to take a look at Texas Instruments for Gainesville. Okay, look at the last 30 days right there. What's going on? 163.57. The 163.57 to 165's 264. Okay, that looks good. 264, that's more than 1%. I do 10% on BMNR. Joseph, I'm gonna pick on you in a minute. I have no idea why you're buying that thing, but okay, fine. Okay, so last 30 days, Texas Instruments. Here we go, last 30 days. Here's the high. She drops. Here's the bottom on Thursday. Monday's higher, Tuesday's lower, today's higher. There's your 2 days right there. 1, 2. So next day, tomorrow, perfect. If you like Texas. Now, I do like Texas Instruments. I already have some. So let's see what it looks like for possibly jumping in again. Let's change this to covered call. Let's get rid of that. Let's do the 162.5s right there. One contract at the market. Here we go. Tell him, Johnny, what does he want? No, ladies and gentlemen, here we go. Buy one, the covered call, Texas Instruments, 14 November. That's next Friday. Next Friday. The $162 call option against the stock to open 305. 16,000 is the investment. So let's take a look. What number is that? Holy cow, we're at 10:15 already. Where does the time go? All right, here's the calculator. Let's clear this. Whoops. Try it one more time. There we go. Clear that. 305 is the profit. The investment for one contract is $15,045. That's 2%. Now remember, we said if 1% per week is 50% per year, what is 2% per week? Isn't that doubling your money? Well, do you like that idea? I like that idea. Now, do I get 2% every week? No. I average 1.4% every week. That's my average. Now, I've been doing this for about, I've been trading for about 30 years, but I've been doing this strategy for right around 15 or 16. And my first few years really weren't that great. But besides the point, we're here now. All right, so 2%. Great. Let's save this one. Texas Instruments. Why not? And it's 2%. Okay. And there it is right there. There it is. Texas Instruments. 2%. All righty. Up a little smaller. Right. There we go. All right. So what do we have today so far? ABBV, Hershey, Texas Instruments. What did we pick up yesterday? Dividend Energy, AEM, CF, Wally World, Comcast. We can probably get rid of these. This was last week. All right, let's get rid of these. All right, hold on. That was Newmont. That was last week. Wow, what is that? Oh, okay. This was Advanced Auto Parts. Okay. This was Verizon. This one was Kimberly-Clark. K-View. Ooh, that was a week ago. That was last week. Uber. That was last week also. Altria last week also. Marvel last week also. And what is this one? AT&T last week also. What do we have here? Oh, K-View. There it is. Here to that one. All right. Let's get back to where we were. Okay. So I like Texas Instruments. Alrighty, alrighty. What do we have next on deck? What do we have next? Okay, copper futures. Yeah, I don't do copper. Sorry, dude. So Gabriel, 3 days to the upside, then I'll jump in. Gabriel, what I said specifically, here's a 30-day bottom coming off of a 30-day high, 30-day bottom, 1 day, 2 days, see, higher. On the third day, I will jump in. So I want 2 days to the upside. On the third day, I will jump in. When do I get out? I get out when my target is hit. So we were just looking at Texas Instruments. The target would be 170. The stock is currently at, 163, so it would be 165, 162.5. That would be my target. So whenever my target is hit, I get two options. Okay, now I look at the stock every day, and I usually buy on Mondays and Tuesday. But I look Tuesday, Wednesday, Thursday, and then Friday morning I look also. I look every single day because it's just like a new habit. You know, you wake up in the morning, you brush your teeth, you get dressed, you have some breakfast, you do your hair, whatever your morning routine is. So with this, you just get up 10 minutes earlier, 10 to 15 minutes earlier. What did I buy? What did I sell? Where is it at now? What should I do? It only takes 10 minutes. That's it. Okay, so you take a look at, okay, let's do it one at a time. One at a time. Step number one. There we go. Step number one. Find stocks you like. Now, stocks that I like are simple. Dividend Kings. 5 decades of increased profits. Why not? Dividend Aristocrats. 25 years of increased profits. Dividend Champions. Different rules, but still 25 years of increased profits. And then the Dividend Contenders. 10 to 24 years of increased profits. And then list number 5 would be anything on Warren Buffett's list. Now, everything on Warren Buffett's list doesn't always have dividends. But if it's good enough for Warren, it's good enough for me. That's the way I look at it. So once I take a look at those stocks, I want to see what's the book value, what's the revenue, what's the dividends, what's the management look like. There's a whole bunch of information we'll look at on the fundamentals. Is it worth the money to buy it? That's number one. Once you get your list of stocks, remember there's over 10,000 different stocks to choose from. Once you get your list, I stick mine into the calendar. Now, the reason why I pick dividend stocks is because dividend stocks are predictable. They do the same things over and over and over again, especially the big old ones, the cream of the crop, the blue chip. Yeah, they don't move very much, but they are at least consistent. I'm going to get my chair. I've been standing all day. What was I saying? Besides, I was standing all day. What was I saying? Dividend stock. Okay, dividend stocks are predictable. So I stick them into the calendar. Now, the reason I stick them into the calendar, so I know what stocks to look at this week. I don't look at all of them. I only look at the stocks that have the dividend coming up. Now, the reason for that is because dividend stocks have a tendency to increase in value. It means the stock price goes up just before the dividend is paid. So just knowing that information allows me to be able to pick more accurately when a stock is getting ready to move. If they're moving just before the dividend, great. Well, now I want to do a safe strategy. Well, the safest strategy that I know of is the covered call. It allows me to buy and sell at the same time and know what my profit is going to be before I even buy it. So if it sounds like a good, it's one of those set it and forget it trades. You buy it, you sell it, and then you just leave it alone until it fills or the option expires, one or the other. Now, I just so happen to look at my shares every day because I just wanted to know, how has the stock market reacted today? Okay, I'll do the same thing tomorrow. What did the stock market do tomorrow? And then on Friday, I want to take a look at 2:30 just before the market closes to see, is there any way possible that I could possibly lose anything? If that's the case, what should I do next? That's it. What should I do next? Okay, what did I buy it for? What did I sell? What is it doing? What should I do next? They're really not that difficult questions. They might be difficult or unclear if you're new. Okay, so let's keep on going. What do we do? Joseph, BMNR. Okay, Joseph, we're over here, BNMR, at Yahoo Finance, Joseph. Now, the reason we're on Yahoo Finance is because I have no idea who BMNR is, and I want to see what kind of dividends they have. No results for BM. Oh, I spelled it wrong. Well, that would be interesting, wouldn't it? BMNR. BMNR. I have no idea what BMNR is. And it's taken a while for it to do it. All right, so I'm not even going to bother waiting for it. All right, let's get to there. Let's get over to here, and let's put BMNR. BitMine. Why do I have a sneaky Oh, hell no. Come on, Joseph. If this thing was at $1 a year ago, there's no way in God's green earth does this thing have 2 decades of profits. No. No, no, hell no. Sorry, dude. Joseph, how are you today? Aiden, what's going on? Thank you, Aiden. Twisted Pasta wants to take a look at Mickey D's, MCD. Mickey D's. Ooh, big jump today for Mickey D's. Well, let's take a gander. There's your high right there. There's your bottom. All over the place. Up, down, up, down, up, down. What's going on in the last 30 days? Well, let's zoom into it and see. Last 30 days. Wow. 30 days ago, we dropped. Here's the bottom. Shoots up. Here's the top. Back down. Here's a new bottom. 1, 2. Now, unfortunately, third day, it's going to be right around here. It doesn't give me a lot of room to go, but still, I'm only looking for 1%. All right, so that being said, the 305s are going for 405 if you like McDonald's. Okay. You're welcome. You're welcome. You're welcome. Okay. D King. Snap still happening with Walmart. No idea what that means, but all right. What do we have over here? 71 questions. Holy cow. How about Mara? Chief Hustle Officer. Okay. We'll call you Cho for short. Cho wants to take a look at Mara. M-A-R-A. Yowza. Yowzy, yowzy, yowza. Here we go. The high, the low, up, down. Look at this. What's happening here? High of the year was at $30. The low of the year is at $10. 10 to 30. That's a big drop. Okay, well, let's find out. Last 30 days. Well, now that looks pretty damn good, doesn't it? 30 days ago, here's your bottom. Shoots up, there's your 30-day top. Back down, 30-day bottom yesterday. A new 1 day to the upside. Now, I like 2 days to the upside, and on the third day, I'll jump in. So how about we take a look at Mara again tomorrow? Edgar wants to take a look at CAG. Isn't that Conagra? CAG? It is, Conagra. Unfortunately, dude, we're bottom fishing. No, wait a minute. No, take a look at that. Last 30 days. Here's your last 30 days for Conagra. 30 days goes to high. The bottom was last Thursday. Higher, higher, higher. No, it's just going sideways at the moment. Doesn't really thrill me because it's a little bit of a downturn. Not quite. No, not really going anywhere. Sorry, Edgar. Before the dividend payout. All right. Questions, questions, questions. Uh-oh. Mr. C. ULTY. Why do people like that thing? Okay. ULTY. Mr. C. Harry Shaven. If AHE starts at 9, she will be retiring early. Oh, yeah. If she starts at 9, she'll retire. No. Terribly sorry, dude. When she was 9, she was a sweet, innocent, wonderful little girl. When she turned 13, yeah, not so much. Planet CEO. How are you today? Thank you for that, Planet CEO. Not quite sure what you mean by that, but all right. All right, that's taking a while to load. What do you think about Taiwan Semiconductors? Okay. Okay, let's stick with ULTY for a second because somebody wanted to take a look at this. Okay, ULTY, $4.70. I want to take a look at just the dividends. Come on. Let this baby open up. Maybe not. Still loading. All right, I'll let that load while we're doing that. CAG's and no. Two fan. Okay, I can't read that one, brother. Sorry. TSN, Taiwan Semiconductors. TSM, Taiwan Semiconductors. Too close to the high, brother. And it's in a downturn. Take a look. 30 days ago, shoots up, pulls back, shoots up, pulls back. It's coming down at the moment. Maybe next week for Taiwan Semiconductors. Christy, how are you, Christy? Sky High, ASTS. Now, I looked at ASTS a while ago. ASTS. AST Space Mobile. Interesting. Not quite sure I even know who this company is. Yeah, Yield Max is still loading. I have no idea who this company is or what they do. Do they even have dividends? At $70? Yeah, no, they don't have dividends. I can tell by the numbers. Okay, nobody pays a $6 premium on a $70 stock. $70 stock should have a 70-cent premium, not a $6 premium. So the premium is absolutely huge on ASTS, if that's what you like. Okay, Tufan, Taiwan Semiconductors. We just took a look at that a little while ago. Eric Hershey is another aristocrat. Market is gifting us. Absolutely. Todd Shaw, REIT. Okay, Todd, you have to give me the ticker symbol for a REIT. Chief Hustler. Joe, what's going on? Question, do you sell your contracts before expiration? No. Montserrat. Hello. Ooh, TSLL. I like TSLL. TSLL. I actually have some of that. Believe it or not, I do. Well, it's on a nice steady up climb. Very steady, if you like it. Okay? Here's the bottom right here, back in April. Very slow up climb to where we are right now, 21.92. If, of course, you like TSLL. Todd, I'm with you. I'm retired and live off of dividends. Okay, Todd, I don't live off dividends. I live off the premiums because the premiums are more than the dividends. So just sit back, relax, Todd, see if it makes sense. And, send me your number. I'll give you a call. Maybe we can chat. See if we, can swap stories. Okay. So, Montserrat. Let's take a look at the last 30 days. Well, it looks pretty plain and simple to see. There's your high right there. It comes down to the bottom here. Now it's going up nicely to where we are. So does it make sense at 22? All right, let's swap out batteries. I don't even know why that one's on. Nobody's even there. Come on. There we go. All right. So let's take a look at the 22 for TSLL. Because I believe I got TSLL at 2150, I think. So 22. 22 right there. One contract. Right there at the market. There we go. And confirm and send. There you go. Right there. Buy one covered call TSLL 14 November at the market to open 176. 2000 is the investment. Well, let's figure it out. Okay, 176 divided by 2024 comes to grand total 8.6. Hold on, I got to get up for this one. Got to get up for this one. Okay, so let me read that again. Buy one covered call TSLL 14 November, that's for next Friday. The $22 call option, the stock is at $21.92 at the moment. $21.92. So can it go above 22 by Friday? Not this Friday, next Friday. You either like the stock or you don't. Well, I have it, and it's one of those. Okay, anyway. What was that again? 8.1? 8.6. 8.7. All right, we're going to save this one. 8.7, yeah, we're going to save it. Okay, 8.7, remember that number. There it is right there. There it is right there. Here it is. Buy one covered call, TSLL, 14 November, the 22 call. 176 is the profit, 2000 is the investment. And that's 8.7%. Let's get out of that. Okay. 8.7%. And there we have it. That works for me. I love 8.7%. What are we down to? 10:35. And we have how many questions? 59, 69, 70. Ooh, a whole bunch of questions. What do we got? What do we got? So, Montserrat, thank you for that. TSLL, I like that number. Okay, New Jersey, we already looked at Mara. APA, Bit2, we already looked at APA. Fax, how you doing, Courtney? Good evening. Emerus, good evening. Eric, Aiden, what's going on? Scott, Maurice, good evening. Asif. Car. Is that car? No, that's not Carvana, is it? Car, C-A-R. Let's get back to where we were before we go and take a look at car. What is car? C-A-R. Avis. Interesting. Interesting. Take a look at that. If you like Avis. Okay, here's the top. Here's the bottom. Here's where it was. Here's where it is. Down, up, down, up. What's going on right there? That's the last 30 days. That's what I want to see. I want to see the last 30 days. Okay, high, low. Where was it? Where is it? Look at this. Down, up, down, up. There's 1 day. There's 2 day. Perfect. The 140s. 140s going for 250. Not quite 2%, but still, if you like Avis. Do we really need to see it? All right, let's do it. Let's do it. Why the hell not? 140. 140 for Avis. One contract. Let's do that at the market. There it is. And there we go. And here's Johnny by one covered call of CAR 100. That's the weeklies. 14 November, the 140 call option, 397, 13,000. What does that come to? Let's get the calculator. There it is, 397 divided by 13,603. Grand total of 2.9%. All right, let's save that one. Let's save it. Give it a second. There she pops up. There we go. And there she is. Where is she? Where is she? Uh-oh. There it is right there. That's tiny. Tiny. All righty. Here we go. Car 14, the 140s, 130. Whoops. Nope. 397, 13,000. What did we say this was? 3%? That works. 3%. All right. 1, 2, 3, 4, 5. That's 5. That's enough. That's enough for today. ABBV, Hershey, Texas Instruments, TSLL, Car, which is Avis. All right. That's enough. What? Let's take a look at the rest. Oh, wow. We still got 20 minutes to go for questions. Okay. DY. Oh, wait. Let's get rid of that. Oh, there we go. I can't read that name. You want to take a look at Tesla? That ain't happening. Tesla doesn't have any dividends. STFU. All right. STFU. Wait. Get out of that. Get out of that. Back to there. Back to here. And what was that again? Weekly 1 day 1 question breaks mean. I have no idea what the hell that means. STFU. STFU. Nothing's even popping up. Jason. Thank you there, Jason. Speak when spoken to. Okay. Dan B., how are you doing? Grumpy monk. I didn't know there was such a thing as a grumpy monk, but okay. Normally, how to contact you? Jesse Electrical Services. Okay. SP Jesse Electrical Services. You're here on TikTok. Just go up to the bio in the top left, click on that little thingy right there, and just send me a message. That's easy. Mike in Love wants to take a look at FCX. I actually have some FCX, Mikey. I do. All right, FCX. Here's the high right there. High, low, where was it? Where is it? Look, it's down, up, down, up, down. What's going on there? Looks like she's dropping. Yep. Here's your new 30-day top over there. 30-day bottom right here. 1 day up. Just keep an eye on it. That's about it. Biscuitine Triscuits. Sin stocks. Well, alrighty then. Miguel, Meta, M-E-T-A. You know, Meta has 2 years of dividends. So we're going to say no to Meta. BTI. What is BTI? BTI. British American Tobacco. Oh, yeah, no. Okay, who came up with that one? Biscuitine Triscuits. I don't do monthlies. These are months, okay? November, December, January, March, June, September. Yeah, no. Oh, that's what you meant about sin stocks. Tobacco companies, Altria, M-O. Well, Altria could have been good here. Look at this big drop. Big drop there. Here's the bottom bouncing up. Oh, what happened? Okay. There's your top right there. Here's your bottom. Now she's going up. 1, 2, 3. Right there. I would have jumped in today. I would have. Because your bottom's there. 1, 2 days up. And there's the 3rd day right there. MSTR, Robert. MSTR. MSTR. Strategy. Okay. Take a look at this. Why would I want to buy that? But what's happening right there? Looking for the new bottom. Okay, 30-day high, 30-day bottom was yesterday. 1 day to the upside, it's today. I like 2 days. So maybe on Monday, if you like MSTR, Robert. What do we have over here? TSM, we looked at how much are you investing? 90% of my assets. Okay, Todd, you need $43,000 a year. Well, Todd, why don't you put your number in the chat? Not here. Todd, DM me with your number. I'll give you a buzz, and you and I can chat tomorrow. Lady Green, how are you today? Okay, TSM we looked at. Beyonce, how are you today? Eldon, how are you? How to win? Okay. Could you analyze MCO? MCO. Is that Moody's? MCO? It is, Moody's. I could, Bobby, but Moody's is a monthly. November, December, January, February. Yeah, I don't do monthlies. It's just wasting our time. Okay, my target's 50%. Okay. Everyone likes to eat Hershey's. You're right, they do. TSM, we looked at TSM. All right, Ron. I thought, hell, no one Hershey the other night when I asked you. That was the other night. Things change. HHY. Okay? Okay, it was a hell no the other night. Do you see what happened in the last couple of days? Okay? Okay, see? Drop. Monday was the bottom. Okay? Tuesday, 1 day up. Wednesday, 1 day up. So 2 days to the upside. On the 3rd day, I'll jump in. So Ron, when you asked me the other day, it was a no. Found the bottom on Monday. Tuesday's higher. Wednesday's higher. There's your opportunity right there. All righty, Ron? Okay, Bobby, we already looked at Moody's. Okay, we already looked at Taiwan Semiconductors. Bobby, TSM, Moody's. Queen of Sheba, how are you doing? MSTR, we already looked at that one. John, do you buy covered calls or just sell options? Nope, John, I do covered calls. Fufu, do you use any technical indicators when determining what stock you will be doing? Fufu, the technical indicators that I use, consistency of profitability and weekly options. If they have a dividend, I take a look at the dividend, when that date is going to be, and I buy it just before the dividend. Alex is in the house. What should I do with Kohl's? I sold the covered call for $16.50 with a 45 per share contract. Okay. $16.50. Okay. Now, Alex, you got a couple pieces of the puzzle missing. Okay. If you sold the covered call for $16.50, that's right here. That baby's going to be taken away unless you roll it into next week or just sell it. I mean, I have no idea. What did you buy it for? See, Alex, you have to take a look at the whole equation. What did you buy it for? What did you sell? Well, you sold the 16.50s. What did you collect? You collect 45 cents. Well, great on a $16 stock. But what did you buy it for? It's always the same equation, Alex. What did I buy? What did I buy? What did I buy it for? What did I sell? What did I collect? Where is it at now? What does it mean? Okay, so you're missing a few pieces of the puzzle, Alex. How do you determine the target to take profits on dividend stock? Okay, user 7375, I'm not quite sure you understand what it is I'm doing. So let me see if I can explain it just a little bit. Okay, we're looking at Kohl's. Let's look at the last 30 days. Okay, so let's look at this for a second, all right? 30 days ago, she shoots up, pulls back, there's the bottom. Shoots up, there's the top. Pulls back, here's the bottom. Now she's going to go turn around and go back up again. Okay, what I'm looking to do is I'm looking to get it at the current price. The current price is $17.50. If I buy it at the current price, $17.50, I'm going to turn around and sell it for $17.50. Now, I know that doesn't sound like much sense because it's kind of not. If I'm paying $17.54, I'm selling it for $17.50. Okay, what you're missing is that I'm collecting 78 cents per share. So if you take the $17.50, what I'm selling it for, add the 78 cents to that, well, now I'm selling it for $18.28. Yeah, $18.28. So I'm buying it $17.54. I'm selling a covered call at $17.50. All the stock has to do is stay above $17.50. I collect 78 cents per share. Per share. So my effective sale price is $18.28. I'm buying $17.54. I'm selling it for $17.50, but I'm walking away at $18.28. So it gives me 78. It gives me a 74 cent profit. So a 74 cent profit on a $17 stock. Let's do the math. Okay, 74 cents is my profit. I'm going to divide it by the cost of the trade. $17.54. $17.54. And that comes out a grand total of 4.2%. Okay, so you're asking, how do I determine the target to take profits? Okay, my target is $17.50. Let's get rid of this. Purchase price, $17.54. I'm going to buy it $17.54 tomorrow morning. And then after I pay for it, I'm going to turn around and sell it using a covered call, which means I'm selling somebody the rights to buy it from me. They don't have to buy it if they don't want to, but for the privilege of buying it at $17.50, which is less than what I'm paying for, I'm collecting 78 cents per share. I'm collecting this. I don't care what the stock does as long as she stays above $17.50 between now and next Friday. I'm only collecting, what is it, 78 cents, 74 cents. That's all I'm getting on this trade. But that trade is 4% for 1 week. Now, my goal is only 1% a week. So if I do this trade, well, yeah, it just looks good. See what I mean? So that's my target. I got 10 minutes to go, and I got way too many questions. All right, so that's the last one we're going to look at. Let's go to more questions. Robert, I already took a look at MSTR. It's going to be a no. They don't have any dividends that are worth anything. All right, user 5424. Advanced Auto Parts, we're going to look at. BROS, we'll have to take a look at that one tomorrow. Oh, boy. Johnny Smith, Hertz, HTZ. I think I got rid of all my Hertz a couple weeks ago. HTZ. Okay, good thing. That's not going to do me any good. Look at that. Okay, Johnny, this isn't going to do us any good. Okay, had a big jump up yesterday. Today, a little bit of profit taken. That's for Hertz, not going to do us any good. Okay, Tufan, we already looked at Taiwan Semiconductors. Simi, SMCI, I'm not going to look at that piece of crap. The only reason I'm calling it a piece of crap, take a look at the dividends. How consistently have they increased their profits? They haven't. They're not consistently profitable, so I don't do SMCI. Cho, Chief Hustle Officer, do you buy at bid or ask? I buy at the market price. Okay, so Chief, I'm at that point in my life where I really don't care about the pennies. And I'm sorry for those of you who do count your pennies. I don't mean to be rude in any way. But I'm at the point where I want to buy it at the market price and I want to sell at the market price. I really don't care. I thought you don't like Tesla. How can you like TSLL? All right, Fufu. Okay, you're under the impression that I bought it for myself. Not so. Well, actually, yeah, I did buy some for myself. But I have clients who I take care of their money for them. When they tell me to buy something, I buy it. And if it looks crazy, ridiculously wonderful, yeah, I'll buy some myself. The vote on Elon's pay package tomorrow is giving TSLL juicy premiums. Okay. Babu. Thank you, Babu. Are you rich? You could say so. Simi, I'm not doing SMCI. Lilu, do you think anything is really going to happen with XRP? Don't know, don't care. How do you like that for an answer? Don't know, don't care. Okay, CRWD, that CrowdStrike, they haven't been around for 20 years. Mike Sweeney, so TSLA is not okay, but TSLL is. Okay, Mike, I didn't say that at all. Okay, now the reason why I don't do Tesla, because they don't have dividends. Now, why do I do TSLL? Well, it's a lot cheaper. Think about it. Okay, TSLA, okay, $462. TSLL, $22. What do you think, Mike? Seriously, it's a serious question, Mike. Okay, TSLA is $470. TSLL is $20. So the question is a serious question. What do you think? Okay, if I can get 2 or 3% on TSLL, fine. Well, can I get 2 or 3% on Tesla? Yeah, I probably could. It just costs a lot more. Night Shift Aqualife. I lost 7K PHP. What the heck is PHP? Peso Filipino. Yeah, well, he serves you right, dude. What the hell are you buying that thing for? Jose, QCOM. I haven't looked at QCOM in a while. Interesting. Okay. What does it look like it's going to do? Well, it's still in a little upward trend. Look at it. Nice little upward trend, if you like QCOM, of course. It's at 180. The 180 is going for $6. Holy cow, that's over 3%. If you like QCOM. Nifty. What else do we got? Alex! For Kohl's, I'm afraid of rolling to next week because of the premium debit. It's really high. Well, Alex, no, or should I wait until Friday to roll? Okay, Alex, you do know I can't tell you what to do. Can't tell you what to do, Alex, because a couple of things. Number one, you're missing a part of the equation. I have no idea what you bought it for. Now, I know what you sold it for, I know what you made, and I know where the stock is. Well, that's only part of the equation. missing the part of what did you buy it for and how many premiums have you collected along the way. So are you in a profit or are you in a loss in the long run, in the grand scheme of things? You can try playing around with the numbers to capture more for the jump up. He's right, you can. But if you let it expire, you also aren't in a bad position. Absolutely. You'd be walking away with like a $22 profit, which isn't much, but it's more than the percent. Okay. John wants to take a look at Pfizer. Pfizer, huh, John? PFE. Oops. Pfizer, PFE. All right, Pfizer, the high, the low, where was it, where is it? Look at this, right here, last 30 days. All right. So, John, I really can't give any good news on Pfizer. 30-day high is 30 days ago. Here's your bottom a couple of weeks ago, but it's just been going sideways for the last 3 weeks. No real rhyme or reason to it, but if you like it, you know, hey, the 2450 doesn't look that bad. You get your 1% if you like Pfizer, because it doesn't look like it's really going anywhere. ID half. Do I do gold? No, I do not. The reason why I don't do gold is because you cannot get a weekly cash flow from gold. I'd also see what James says because I wouldn't say I'm a pro yet. Thanks, Fufu. Finbin, Lulu. Now, I'm going to say no to Lulu just because Lulu has not been around for 20 years. So no way they're consistently profitable. They have been going sideways for the past couple of months. Look at that. Okay, down, up, down, up, down. Hypothetically, she should be turning around right here, going back up again. If you like Lulu. All right. In the long run, I've made profit for 6 weeks. That's awesome. I'd let it expire and see if it pulls back and move on. I'd do the same thing. Okay, you've been in for 6 weeks. You've made a profit for 6 weeks. Now it jumped up and the market maker is making you pay to roll it forward. I just let it go. Because if you're not getting a profit on it, why hold on to it? Because where are we? Coles, KSS. Okay, you've been in it for 6 weeks. Here's your bottom, it jumps up, back down. Now it jumps way up. Fine, let it go. When it comes back down to here, jump back in again. I mean, I've been doing Coles for the past 2 years because it keeps giving me a nice premium every single week. It just makes sense. Thanks, James. I haven't rolled yet, so I'm still new to rolling. Alex, ask me tomorrow. Apple user, what about TPL? What the hell is TPL? Texas Pacific Land. No. Who's that? Who came up with that one? Apple user, I don't do monthlies. November, December, January, April. Monthlies just don't work. Weekly options only. Stefan Ashmore, Philip Morris. Ooh, check that out, Stefan. Okay, bottom of the year, top of the year, new bottom. Look at this, down. Now she's going up. It looks like an awesome position right there. Last 30 days. 30 days ago, we're at 156. Jump up to 160. Drop down to 142. You got 1, 2 days up. If tomorrow is higher, that looks like a good entry point. 148, the 148s go for 240. That's more than 1.5%. If you like Philip Morris. Always comes back to that damn last question. Do I like this company? I'm writing Philip Morris down just in case. Okay, so I'm done with that. PLTR, oh hell no. Tarek, take a look at the profits for PLTR. Take a look at the dividends. Have they consistently increased? Probably not. Mikey B wants to take a look at Kinder Morgan, KMI. Interesting. You look at your last 30 days. Unfortunately, Mikey, look at this. Just going sideways for the last couple of weeks. 25.92. The 26s going for 22. I'd say no. Only because if I'm buying it at 25.92, selling the 26s, I'm only picking up 22 cents. That's less than 1%. So no to KMI. Sorry. Sorry. Why not KMI? Mikey, did you hear what I just said? Number one, it's going sideways. Number two, at the money is going for less than 1%. BDJ. What the hell is BDJ? BDJ. BlackRock. Yeah, what are you kidding me? It has no options. Why are we looking at no options? No, thank you. Palantir ain't going to happen. Bob, we did Comcast yesterday, and it was a yes for yesterday. I don't know what it looks like today, but we're past 11, so it's not going to work. Do you have a trade, or can you just keep for... Oh, Christy. Yeah, I could. Okay? So the question Christy is asking is, do you have to trade, or can you just keep it for years? Yeah, of course you can. You don't have to trade it. Okay, Christy, everybody is on their own different journey. I'm just sharing my journey. My journey is simple, safe, predictable, consistent, 1% per week. I'm looking for cash flow. If you're talking about buying something, holding on to for years, you're definitely in the wrong place, kiddo. Seriously. What I am doing counterproductive to what you want to do. You want to buy a stock and hold on to it for years. You don't want a dividend stock because the growth is extremely slow and they take part of the profits and they give them back to the investors. You want a growth stock. If you're just interested in buying something and holding on to it for years, you want a growth stock. You don't want a dividend stock. Dividend stocks pays cash flow, people like me. Hopefully that helpful, Christy. Dr. Corey, what a great show. Thank you, Dr. Corey. Real AI Sphinx, your shirt tag is out. Why do people pay attention to the most hideous, stupidest things? It's shirt tag. Big deal. Anyway, but thank you. SB 1981, Colgate. Didn't we look at that the other day? Colgate Palmolive CL. RR. Wait a second. That rings a bell. Why does RR ring a bell? RR's ringing a bell. RR. Ricart Robotics. Oh, hell no. Harry, you might like the robotics, but if this thing was less than 50 cents a year ago, there's no way in hell it has 2 decades of increased profits. No way. 50 cents last year, no way it has 2 decades of profits. No way. Sorry. I like Colgate Palmolive. They've been around for over 100 years, and they have over 5 decades of profits. Harry, Colgate Palmolive, over 5 decades of profits. Our robotics, there's no way in hell it has even 5 years of profits. Not at 50 cents 6 weeks ago. You like the board? GSK, 1961. Thank you. Dr. Corey, do you do one-on-one coaching? Absolutely, Doc. Doc, if you want to, I'd give you a buzz. Just drop me your name, your number, not on the screen. Go to the profile, the what do you call it? The bio. Okay, go to the website, book a call, or just send me your phone number right here on TikTok. And not on the screen though, in the DM. I'll give you a buzz tomorrow or the next day. Hey, 86 is in the house. Dude, it's 11 o'clock. You just getting here? Diana, how are you today? Hormel, HRL, another dividend king, over 50 years of profits. The bottom, look at this. The bottom's right there. Holy cow. Here's your last 30 days for Hormel. The high, she drops back up, drops again. Here's the 30-day bottom. 1, 2, 3. 3 days to the upside. 21.50. The 21.50 is going for 30 cents. That's over 1.5%. If of course, you like Hormel. Now, Hormel, they've been in business for over 100 years. They got 5 decades. 5 decades, that's 50 years of increased profit. They're dividend king. Why not? Uh-oh. Dr. Corey. Dr. Corey, I feel bad about this. You want to take a look at QYLD. QYLD. Now, Dr. Corey, you're not going to like it. You're not. QYLD is not consistently profitable. QYLD hasn't been in business for more than 5 years, I don't think. Okay, historical data. Okay, I want to look at historical prices, and I want to look at all of the dividends. So I want to go here. It's just not popping up. But the reason why I say that, because I know, because I've looked at QYLD many times. Bobby, Moody's, where I looked at it. What do I think about XRP? Eric, XRP is not a dividend stock. Okay, the name of the show is Dividend Investing for Weekly Cash Flow. XRP doesn't have dividends. Gary in DC, thank you for that, Gary. All right, so Doc, apparently this is not working because for some strange reason it's not opening up. But I do know QYLD doesn't have increasing dividends for 2 decades. I know that for a fact. ULTY, Danny Boy, same thing. Sure, just think about your option. Oh, just thinking about my opinion. Well, my opinion is if it doesn't have dividends, why am I looking at it? Annalie. Ooh, I like Annalie. Okay, why isn't this thing popping up? Come on. We're already past 11 o'clock. What am I doing here? Why is this not working? There it is. Okay, Doc, I want to look at dividends only because a dividend is a portion of the company's profits that they give back to the investors. So if I'm looking at just the dividends, well, it's going to tell me how consistently profitable is this company. All right. So I want to look at the maximum amount of dividends that they're going to show. Maximum amount. Here we go. Okay, Doc, you ready for this? You're not going to be happy about it. Here we go. The very first dividend for this company, January 22nd, 2014. January 22nd, 2014. I mean, there's only 11 years. 11 years. 11 years of profits. Well, let's see how profitable it is. All right, we're going to change this to that. Is that right? Nope. Okay, that. And then we want to get rid of that. Okay. All right, Doc, you ready? QYLD, 25 cents is the first dividend. 25. Down, down, up, down, 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 up, down, up. Well, hold on. 1, 2, 3, 4, 5, 6 times going down, 3 times going up. I don't know why you think that's good. Hold on, let's take out some more. October. All right. 24. Down, up, down, down, up, down, up, 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 down. 1, 2, 3, 4, 5, 6 is 11. 1, 2, 3, 4, 5, 8. So it's 11 to 8. 11 times it's gone down, 8 times it's gone up. Okay, 15, 16, right there. Okay, 18. Okay, up, up, down, up, up, down, down, up, down, up, down, down. Doc, this is not looking good. It's going down more times than it's going up. Now, if you understand what a dividend is, A dividend is a portion of the company's profits that they give back to the investors. So if this profit keeps getting lower, they're not profitable. Why the hell would you put your money into something that's not profitable? Okay, hold on. I'm not going to do any more on this one. All right. What I am going to do is I'm going to show you one that it should look like. Okay, this is Microsoft, Doc. Hold on a second. Let it pop up. Here we go. Now, Microsoft, we're going to go all the way back as far as it will go. I only want to go back to 20 years. I don't really need to go back that far. Come on. Come on. There it is. Maximum. I want to do the maximum amount of dividends because I want to see all of them. Okay. All right, Doc, you ready for this? This is what it should look like. 2005, right there, February 2005, okay? Okay, you ready? I'm going to change this to that. Here we go. You ready, Doc? Here we go. 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Did you notice each and every single year? Each and every single year, Microsoft increased its profits. QYLD does not. Okay? MSTY does not. There's a whole bunch of companies that are not consistently profitable. It boggles my mind why people keep investing in something that goes up, down, up, down, up, down, and it's not consistently profitable. Boggles my mind. I'm just 5-year chart shows steady increase and pays dividends. Oh my God. STAG, huh? STAG. Who came up with that one? Finbin. 5 years, an increase in the dividends. For 5 years. I just showed you Microsoft that was 2 decades. That's 20 years. And you're excited about 5. Okay. So let's go all the way back. 22, 20, 19, 18, 17, 16, 15, 14, 13, 11. So this thing all goes back to 2011. All right. 20, 26, 27, 30. Okay. Hold on. 30, and it went down to 10? It went from 30 to 10. And you think that's good? Hold on. Oh, okay. 10 and a half. 11. 11.3. 11.3. 11.5. 11.6. 11.7. 11.8. 11.8, 11.8, 11.9, 11.9, 12, 12, 12, 12, 12.1, 12.1, 12.1, 12.2, 12.3, 12.3, 12.3, 12.4, 12.4. It was at 30 cents. It was at 30 cents. Now it's at 12.4. Why do you like that? Okay, we looked at Microsoft. Some profitable companies do share buybacks versus paying dividends. Yeah, Bobby, I get that. I'm not interested in those companies. My specific interest, Bobby, is cash flow. That's all I'm looking for. Consistent cash flow. What do I think about HIMSS? Okay. Microsoft is a magnificent. Okay. Check out VOO. Oh, hell no. VOO. This is going to be my last one, then we're calling it a day. Jay Moore, how are you doing? We're going to wait for VOO to pop up. Life of Frody. Hey, Life of Frody, how are you doing? Steve McGregor, how are you doing? What's taking this thing so long? Stag. Oh. VOO. Okay, waiting for VOO to pop up. Who came to that one? Fatty. Interesting name, Fatty. Do I like SPYH? Stephen, terribly sorry, dude. Okay, let's go all the way back to the beginning with VOO. This is the reason I don't like VOO, Fatty. Very first dividend, 2010. That's only 15 years. Coming up a little bit short. Hold on. Uh-oh. What the hell just happened? All right, here we go. Let's change this again. 55. Lower, higher, 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 lower, higher, 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 lower. Oh, well, that's much better than the last one we looked at. All right, 2013, 67, right there. Okay, higher, 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 lower, higher, 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 lower, higher, higher, lower, lower. Okay. Okay, 95, right there. Okay, 95, lower, higher, lower, higher, 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 lower, higher, higher, higher. Still doesn't really thrill me. I like consistently higher. This is not consistently higher. Okay, so it's 1:15. I'm done for the night. Jen, I come trade with me. Good evening, Miss Jen, and how are you today? Jen, I'm just getting ready to leave. Terribly sorry. Terribly sorry. Do I like SPYH? I have no idea what SPYH is. SPYH. Let's see what the dividends look like. Finbin. What's the question mark for, Finbin? Kind of curious on that one. Okay, Twisted Pasta. Why TSLL is not a dividend stock? Because one of my investors wanted me to buy TSLL. Which site are you using? What do you mean, which site am I using? This is not this right here? This is Yahoo Finance. Okay, so SPYH. Do I like it? Well, this thing doesn't even have 1 year of dividends. April 23rd, 2025. 25, 33, 33, 34, 35, 35.7, 35.8. Okay, higher and higher and higher, each one. But it's only like, what is that, 7 months? It's only 7 months old. Why am I excited about a 7-month-old company? Sorry, just doesn't work for me. Okay, Fatty, that is Yahoo Finance. Yahoo Finance gives me my financial information. Okay, Twisted Pasta, I gave you the answer for that one. You're right. It looks like it's one of his exceptions. There's always one. Thank you. Mom Boss, what dividends pay weekly? None. WEC, Karen, how are you today? Lisa G, how are you? Crystal, we'll have to take a look at Wednesday tomorrow. Well, pasta, you know what? I like bacon. Have I ever seen a vegetarian eat bacon? No, I don't think I have. Great day from Macy's. Thank you, Enron. Q stock review. Not today. Okay. Tony, how are you doing? Why not just play Exxon every week? Because Exxon doesn't do what I want it to do every week. XOM. That's why I don't do Exxon every week. Kevo, you see this? Down, sideways, up, down, up, down, up, down, up, down, up, down, up, down, up, down. Whoops, up, down, up, down, up, down, up, down, up, down. That's why I don't do X on every week. I'm up 17% with VOO. Pay me on wheels. Okay, you're up 17% on VOO. All righty, that's good. JFM, how are you? Samuel, how are you doing? Kevo, you can get weekly cash flow from GDX. What is GDX? GDX. Venic Gold Miners ETF. All righty. GDX. If we can get weekly cash flow from GDX, let's see how they pay their dividends. Are they consistently profitable? How far back do they go? All right, 2006, 2007, nothing in 2008. It goes from 11 to 74 to 11. That's not good. To 40 to 15. 2010, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. Okay. Okay, so this guy's only paid once a year. Okay. So GDX, Kevo, has a dividend once a year. And look at it. 40 cents, 15, 46, 19, 12, 11, 5, 17, 10, 19, 19, 53, 47. There's no consistency there whatsoever. No consistency whatsoever. Andrew, 1% weekly ROI, 60% ROI. Ask AI if a legit advisor would ever sell that ROI. Andrew 404, thank you for that, but unfortunately, I'm going to disagree with you. Okay? Now, Andrew, you're under the assumption that the 1% I make on a weekly basis is compounded. No. I get the 1% on a weekly basis to pay my bills. So what's left after that 1%, maybe a couple of bucks goes back into my trading account and it grows very, very slowly. Okay? Okay, Diana, we'll take a look at PPG tomorrow. I'm basically done today. So you guys have a great day, and we'll do this all over again tomorrow. And you guys have fun, and you guys have fun, and you guys have fun too. That's done. That's done. That's done. Whoops, come on. Oops. All right. That's done. That's done. That's done. All right, that's done. And, oh, check that out. Nice little profit for today. Done there. Done.